Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Wednesday. And we're here now at the 11th of December 2024, about 6:20 p.m. Central Time. I'm cold. Chicago, we're going to be tonight near zero. Wind chills will be well under that. So this is our freeze, and then we warm up over the weekend again. But boy, you talk about the first winter freeze, I'm telling you, it's chilly. Markets weren't chilly, they were red hot. We had CPI that came out a little hot. Now let me define that. Hot's the wrong word, warm. So you went up 0.1%. That's not enough to take the Fed off where they're going. By the end of the day, the Fed watch page, I don't know if you ever go to that, but it's the probabilities of where the trader bets are going, what the Fed will do at any given meeting. 96% now. So I think you've seen that you get tomorrow the PPI meeting, but I'm not expecting that to offset this. I think the Fed goes to 25 basis points, but I think you'll be hard-pressed to get them to go again until at the earliest, the end of March, mid-March, when the quarter's coming to an end and one of the other meetings coming. I don't expect them to go in January. I expect them to say, all right, we've given you another one. Let's take a fresh look. Bank of Canada did that today. They moved rather sharply and they said, we're going to see what this market has to do and we'll go there. Brazil surprised the heck out of the markets. They raised their interest rate 100 basis points and they said there's more of those yet to come. So they're trying to tame inflation and shore up their currency because it's really fallen hard. And people have to understand when that currency goes down hard, all you're doing is importing inflation for everything you buy outside of your country. Very, very difficult. So what the stock market did with the news is the market and the NASDAQ went up and got over for the first time in the cash to 22,000 level. Let's applaud it. The rally today was most definitely led by the tech stocks. Not to be left behind on it, though, was the dollar, which gave you a rally also, finishing 31 higher. And even with that, the gold market came alive and got back up here a lot, mid 2750 area. Take a look at that. Silver came up a lot. Now, be careful. When you wake up in the morning, you're liable to hear, it's possible, I don't know if you'll get it tomorrow, I think we're going to get it Friday. We're going to hear one more day what China does with their stimulus packages. They're behind closed doors. It's a 2-day meeting. They finish on the 12th. So with the time differences and all, we probably get it late evening tomorrow night, Friday morning, what they want to tell us. Now, they don't tell you everything. At this meeting that they're having, they also set the yearly growth, and they don't let that out of the bag until March. They'll walk out of here, and they don't have to say anything. So the rally you're getting here and the rally you got in the energies is in part that China's going to do something and be one of the largest, as you know, users of crude oil, and half the world copper is used by China. Everything hangs on what they do to some degree, so that's going to be very important. Here, we had a heck of a rally. I mean, you came from the 60-30 zone, 60-40, as you'll see when I do the financial update, and there'll be a lot more to talk about there as to what's going on. Now, in the morning, you're going to get the weekly jobless claims. They're expecting it at 220 off 4,000. And we're going to get the U.S. November price indices. Look for about a 0.2% increase. That's what the market's looking for. We'll want to see PCE numbers, what the inflation looks like. It's one of the Fed's favorite indices, the PCE. You keep your eye on that. But I looked at core inflation, and what the Fed's going to hang its hat on in part in the CPI was that rent inflation only went up 0.23%. That's the slowest increase in years. It's still an increase. And shelter makes up 40% of the CPI when you strip everything in there. So got to pay attention. You're going to get your natural gas storage. You're going to be up probably tonight because of the cold in the Midwest, which it will move east very quickly. This is not due to hang around here, but it's making life rather miserable. So pay attention to all that. You know, this is that time of year. I want to remind you, by the way, before I get ahead of myself here, and I am getting ahead of myself, that tomorrow's the last day you'll be able to see this report, my stock index report. And boy, does the timing of that look right for what I did. That's all I'm going to say. I want you to see the report. So go take a look at that on our website at iraepstein.com. You can move your cursor to the top. I'll have a cursor up there for you, and you won't be hearing me talk about this tomorrow. Even though it'll be there tomorrow during the day, I'm through advertising it. A lot of people have seen it, and I hope you appreciate what we do with that. All right. And by the way, I'm preparing another report already. I don't know if I'll put it out tomorrow or if I'll do it on Friday, but I'm going to be doing another one very quickly here. All right. So as I said, let's go to the chart action and see what we've got here. Bonds and notes, by the way, they fell back today. So we're looking at interest rates have a different game. The further out you went in the curve yield, you were adding yield. The short term, the 2-year note, just the opposite. It was hanging there because that's going to be affected by what the Fed does. In the gold market, you've come back very nicely. On a closing basis, you're not far away from the all-time high on a weekly close. You've now come up, and I thought you'd have some questions and problems right here where you're at. That's the last high, and then we went into this. Now, if you can close over that, well, it's certainly then a breakout of that whole pattern. I'd like to see a pullback in the market because I want to get to the pattern with higher highs, higher lows. Gold and silver often rally into year end. They follow a trek that is very similar to what stock indices do on the Santa Claus rally. Pay attention, and we'll talk about that over time here. The battleground has been won by the bulls, past tense. They were able to hold the market at the 18-day average, and over the past 72 hours, not including tonight, the market finally popped out of that and came up. Where's it stopping? If you plot Bollinger Bands on your charts and you learn how to use them, it's just the most interesting thing. Before I used them, I'd wonder, why is the market stopping there? It's just the funniest thing once you learn how to use them. And different markets work a little different with them each time. I try to teach that in the mornings. As you can see, you're overbought. So that's why I'm saying I can make the argument here that the market can stall out, pull back. Maybe it gets disappointment with China, whatever it is. I'm looking for a pullback to get a buy set up from. If I don't get it the way I want it, nothing to do. The gold-silver ratio, silver is still, as long as it stays under this 18-day average, still it's stronger than gold scenario. Now, when you get to the silver, you've latched on to the upper Bollinger Band. We call that the gorilla glue trade. What it tries to do is force both the blue and the red line. In parlance of slow stochastics, the red is called the K line, the blue the D. You want to know what the whole difference is? One uses, because it's a daily chart, 3 days worth of data, the other 5. Now I modify how the internals work of it, and that's why mine looks a lot different often than yours. But my subscribers can get that from me, the formula to my work, and TradingView has it, and of course our 2 charting software packages, QT and the Linn trading platform, so they have it as well. But you can see how the market hugs that. So when it does, yes, it's overbought right now. Yes, the market's in an uptrend, but it needs to embed, because temporarily the overbought on my work is a filter to say, wait until the market either embeds or corrects. When we come to the copper market, similar too. You're overbought. You've rallied into, and we've talked about this during the week, the 100-day average in the Bollinger Band, and I thought that would be formidable first resistance. Now, what China does can blow everything out the water. We don't know what they're going to do. I don't know if what they're going to do, we're going to look back at this and the market comes back down, or if the market's going to add more legs here and try to come up and go for these highs. It all depends not only on what they say, what they do, but what the market believes in what they say. That's going to be very important. They have a credibility problem, I can tell you that. You want proof of it? Look at Donald Trump. He had a deal with them to do all the grain deals and everything the first time around. I was asked today on I was doing an Australian business interview, and I said, do you honestly think that man doesn't have the mind of an elephant? He knows the deal that he did, they didn't live up to. So while I think he can, I really think that Mexico and Canada can get away from 25% tariffs. Maybe a few items have to be, I don't know, the negotiations. China, They're going to have to really do something in order to convince Trump that they're anything but not truthful to their word, because they didn't live up to it under Biden. No question. That's fact. That isn't Ira's idea. So as you can see, the battle's right through here. We'll find out what's going to happen on that. In the dollar, you are just caught in this sideways action right now. The Bollinger Band's void of a trend. Higher high, lower low. So now it gets interesting, because now you have to prepare for the PPI, and then next week you get a whole slew of other things. In fact, tomorrow you also get, remember, the European Central Bank and the Swiss National Bank. They're going to be coming out with what they do. But I'll talk about that in a few minutes in the financial update. In the meantime, remember what you've got here, and remember that if you'd like to join and take a look at my special report that comes off tomorrow, it's on our website, iraepstein.com. Just take a look at the top left and away you go. Can't be easier than that, and there will be a link up here anyways you can click. I'm Ira. You take care.